Alibaba is back in the game, and this time with a bang. While American tech firms are on fire, this company is growing, and once again it looks like Michael Burry has bet on the right horse. After years of slumps and problems that have dragged its stock down nearly 82%, the Chinese e-commerce giant is coming up with something that could completely change the game in artificial intelligence. Investors reacted immediately. Alibaba shares jumped 8.4%, and optimism about the company's future is growing. The company plans to invest over $50 billion in AI and cloud technologies, challenging global competition. Could its stock hit $200 this year? Alibaba, the giant of China's e-commerce business, has been in the spotlight in recent months for its advances in artificial intelligence. The latest developments signal that its stock could climb as high as $200, despite all the current hurdles in the form of tariffs and a slowing economy that are currently plaguing U.S. stock markets. It all started with the announcement of a new AI model called 𝗕𝗂𝗋𝗋. With this model, Alibaba has responded to the ambitious move by startup 𝗕𝗂𝗃𝗃, which shocked the world with its powerful R1 model. 𝗕𝗂𝗃 R1 proved that Chinese AI technology can compete with Western giants. It surprised with its performance, speed, and most importantly, it was built at a fraction of the cost and with minimal power consumption. When it was unveiled to the world, it caused a panic on the global markets that sent U.S. indices down several percent within hours, and the current leader in AI, NVIDIA, crashed even further. Alibaba, however, was not left behind. On Thursday, Alibaba unveiled its new version of the 𝗕𝗂𝗶𝗀𝗋. This model demonstrated capabilities comparable to leading technologies such as those from OpenAI and 𝗕𝗂𝗃. Surprisingly, however, it only has 32 billion parameters, while 𝗕𝗂𝗃's R1 model operates with a significantly higher number. It has 671 billion parameters. What are these parameters in the context of AI? Think of the parameters in AI as neurons in the human brain. The more there are, the more complex and powerful the model can be. In practice, parameters are actually small pieces of information that the model remembers during training. Each of these chunks affects how the model understands text, generates answers, or solves problems. Let's take an example. A model with 32 billion parameters is like a skilled expert who has a lot of knowledge in his head, but focuses only on the essentials. A model with 671 billion parameters is like a professor with a huge library who has an enormous amount of information, but needs more time and energy to piece it together. The key trick is that some models, like 𝗕𝗂𝗃, can only activate a portion of their parameters at a time. That's like a professor opening just the right book instead of digging through an entire library. This makes operation cheaper and faster. Alibaba has shown with its 𝗕𝗂𝗶𝗀𝗋32B technology that a smaller model with efficient parameter utilization can be just as smart as a giant model, but at a lower price. And that's the key to success in the growing AI market. What is also growing is the number of subscribers to our channel, so join too. Don't let any important information from the world of stocks escape you. Moreover, Alibaba plans to invest more than 380 billion yuan, US $52.4 billion, in cloud and AI over the next 3 years. This massive capital commitment is expected to strengthen its position in the technology sector and enable faster adoption of AI solutions. The future of artificial intelligence is marked by innovation, and Alibaba seems well on its way to becoming a key player in this revolution. This puts the company on a good footing for the first time in years. Let's take a quick look back at what Alibaba has had to go through in the last 4 years and how its share price is currently looking. Alibaba has been going through a rough patch in recent years. In 2020, Chinese regulators stopped its planned $34 billion IPO of its financial arm Ant Group, which was supposed to be the largest initial public offering in history. Shortly afterwards came a record $2.8 billion fine for monopolistic practices. These crackdowns triggered a plunge in Alibaba shares, which have lost almost 80% of their value since their peak. In response, the company began restructuring and planned to list its logistics division, 𝗕𝗂𝗋𝗋. However, in November 2023, another blow came. Alibaba suspended the planned spin-off of its cloud division due to U.S. chip restrictions. Against this backdrop, well-known investor Michael Burry, famous for his prediction of the 2008 financial crisis, decided to invest in Alibaba. His fund, Cyan Asset Management, has been gradually increasing its stake in the company over the course of 2024 until it reached 200,000 shares worth about $21 million at the end of September. He sold 50,000 shares in November. If you want to invest like the pros, check out 𝗕𝗂𝗶𝚀, where you'll find a DCF-based fair price and relative valuation report that already includes more than 2,000 companies. Together with in-depth analysis, data, and community insights, you'll be pricing stocks like the pros. Despite these challenges, Alibaba is not giving up, and its stock is now rising nicely. Let's chart it out. One share of Alibaba stock was trading at $320 at the end of 2020. But in the coming months, those problems we've been breaking down came, and the stock started to sell off heavily. By mid-2022, the price had shrunk to just $60 per share, which equates to an 81% drop. Until this year, when the company outperformed and introduced a very promising AI model and growth projections for the coming years, the stock price was trapped between $60 and $120. That was the period when Michael Burry was also buying. It wasn't until February that it hit its highest levels since 2022. The peak this year for Alibaba stock is therefore $145. So shouldn't the price be selling off as quickly as it got to these levels in the context of the US stock market literally crashing? Not quite. The stock is now only 4.5% below this year's peak and has even been gaining over the past 2 weeks. The Hong Kong index is also rising, and Asian markets are generally doing much better than the US ones. The Hang Seng index is already up 20% since the beginning of the year. This growth has taken it to its highest levels since 2022, similar to Alibaba. So investors are moving from American titles to Europe, but as you can see, also to Asia. Do you invest in Alibaba, or do you prefer to stay away from Chinese stocks? Let's break it down in the comments or directly with the community at 𝗕𝗂𝗶𝚀. Good luck with your investments.